Welcome back to Live from Paris. It's time for business, and I'm joined by Stephen Carroll. Hello again, Stephen. Now, fresh from their Nobel Peace Prize win, European leaders are preparing for another meeting, yet another crucial week for the Eurozone. We're hearing it's going to be dominated by the debt crisis.
I mean, there's no other way around it. As always, when any two or more European leaders gather, we're always talking about the euro, and the same expectations are going to come out of this meeting starting in Brussels on Thursday. Officially on the agenda is strengthening those economic and monetary ties, as we've been hearing over again, and also trying to restore confidence in the euro, which is what all of these efforts they've been making has tried to do. But there's a lot going on the sidelines as well. In particular, the Greek Prime Minister, Antonis Samaras, is hoping that he'll be able to get a deal to extend how long it takes for Greece to pay back its debts before this meeting starts. There's some negotiations going on the sidelines to release the next tranche of their bailout money. It's hoped that that'll be able to tie in with that. He won't be too impressed, though, with his Swedish colleague. The Swedish Finance Minister, Anders Borg, speaking in Tokyo at the weekend, said that it was most probable that Greece would need to leave the Eurozone, and could happen in the next 6 months. He's the first European finance minister you hear say that so strongly. It's not a popular view among his colleagues, though. The German finance minister, Wolfgang Schäuble, also speaking at the weekend, said that there was no sense in speculating on the matter. They're still very much behind Greece staying in the single currency.
So there's been a lot of controversy surrounding the awarding of the Nobel Peace Prize to the EU. Next up, it's The Economists.
Yes, the poor dismal science always comes last in these Nobel Prize laureates. Thomson Reuters do estimates every year of who they think is going to be the most likely candidates. They're usually pretty spot on. So here's a look at some of the candidates that they are tipping for the top. First up, Stephen Ross. He teaches at the Massachusetts Institute of Technology. His work is in fundamental concepts in finance, including some that have become standards in setting prices for securities trading. So very important for people who deal in this area, the sort of work that he's and the research that he's done. Next up is a pairing that have been tied thanks to their works on the link, their work between income and well-being. 68-year-old Sir Anthony B. Atkinson teaches at Oxford University. His work largely focuses on income inequality. Angus Deaton, who he's been paired with, teaches at Princeton. He's best known for his work on happiness and well-being, including calculating the optimum income for a household is $75,000. According to economists, if you earn more than that, you are less efficient in economic terms. So that's a motivation for us never to earn too much, I think. Finally on the list is Robert Shiller. He's probably the best known. He writes an awful lot in the likes of the New York Times, and he's very a well-sought economic commentator. He's repeatedly warned about the dangers of economic bubbles, and also he was one of the people who raised rare voice concern about Lehman Brothers before they collapsed. So someone who certainly has been proved right in hindsight.
And we'll find out then who the winner is at 1 p.m. Paris time. And we'll, of course, be bringing you the latest result right here on France 24. Now, moving on to another warning over France's ability to compete internationally.
Yeah, this time coming from the head of the French business and employers group MEDEF. Their head, Laurence Parisot, has been speaking to Le Figaro newspaper, and she said that the situation is now so serious that there are some CEOs who are in a practical state of panic, worrying about the future of their businesses. Now, there's a government-commissioned report on this area, which is due out next month, but Laurence Parisot in particular has called for a reduction in the taxes that employers have to pay for their workers. Now, there are some French businesses that are managing to keep their competitivity in these difficult times. The espadrille, the shoe like the French Barry, another icon of French fashion, had been hit by imports coming from the likes of Bangladesh and Pakistan, but the industry is now making a comeback thanks to targeting the higher end of the market.
The small town of Morillon in the foothills of the French Pyrenees was once home to 2,000 workers churning out the world-famous espadrille rope-soled shoe. Nearly all the factories closed in the 1980s as cheap imports from Bangladesh took over. But this factory is living proof that traditional French industry can make a comeback. Rather than try and compete on price, this espadrille maker has gone upmarket, more elaborate and more expensive to make, but they found a market abroad by focusing on heritage and a made-in-France artisan approach.
We have to compete with countries like Bangladesh, like India, like China, and you can find the same product for third price, fourth price. So our contribution to this product is try to make it as fancy and as different as it can be. Would say like printing, like sewing, and giving it this kind of appearance which is unique.
More than 150,000 pairs of these espadrilles have now been sold in the past 3 years in upmarket boutiques in Asia and North America. The mayor of Morillon, an entrepreneur himself and full-time espadrille wearer, says there's a mood of optimism.
This trend or talk of bringing work and manufacturing back to France is great. We're going to profit from this opportunity while we can, as it will create jobs. The enthusiasm may not last, but the espadrille will survive, and we'll carry on promoting it.
There were just 100 espadrille employees left in Morillon a few years ago. Now they're hiring again to make models for next spring's collection.
A look now at some of the day's other business news in brief, and there's another indication of weakening in Chinese economic growth. Inflation there slowed to 1.9% in September, according to government data. China's economy did grow by 7.6% in the second quarter of the year, but that rate of expansion is slowing down.
Japanese mobile phone company SoftBank is reported to be close to a deal to buy 70% of American network Sprint. Sprint is the third largest US mobile operator, but it's been struggling with long-term debt and stiff competition from other networks. The SoftBank deal is estimated to be worth $20 billion. The company is expected to make a formal announcement on the purchase just under an hour's time.
And the Paris Auto Show has closed its doors after 2 weeks open to the public. The show had 1,230,000 visitors, slightly down on 2010, but still remains the most visited car show in the world. It'll return to Paris in October 2014.
All right, moving on to the markets. How are they looking this Monday morning?
Well, trading has just begun on the European markets, and those Eurozone worries are weighing heavily again. The market's not too impressed with the overnight news from China either. We heard that the exports in China grew by 9.9% overnight with very good figures, and that impacted on the Asian markets too. You can see that they closed slightly up and down there. You can see the Nikkei there, the greatest gains, just up 0.5%.
Okay, now an airline, a brewery and a charismatic CEO. Kingfisher was the brand that had it all, but financial difficulties have grounded its planes and a warrant's been issued for the chief executive's arrest. Striking workers are due to meet management on Monday to discuss the ongoing crisis at the company. Mark Thompson has the story.
It was India's second largest airline. Now it faces a fight to stay afloat. Kingfisher hasn't turned a profit since its launch 7 years ago. In that time, the company's defaulted on its debts to airports, tax authorities and banks. Its fleet has been grounded since employees went on strike in late September. They say they're owed 7 months back pay. The government, too, are seeking assurances.
What we need is concrete plans from Kingfisher, how they will operate, how they'll maintain the schedule and how they will make sure that planes are safe to fly.
An arrest warrant has been issued for the company's founder and CEO, Vijay Mallya. Kingfisher's owner failed to appear in courts last week, despite a summons. The businessman made his fortune brewing Kingfisher beer. Earlier this year, Mallya pumped around €1 billion of his own money into the carrier. Analysts say it might not just be the airline at stake, but also the fate of his brewery, Formula One team, and a leading Indian cricket side.
And that's it for business. Thank you very much, Stephen, and thank you for watching. Stay tuned for the latest headlines with Stuart Norval in just a few minutes' time.